Hey traders, welcome to Charts and Coffee, and actually a little bit of water too. Hope everyone is having a good week, winding down the new year, thinking about the things that you want to do better or differently in 2025. What things won't you do in 2025? What processes won't you use in 2025? I think a lot of times when we're looking at a new year, and I'm not a big fan of setting resolutions, but why not just go with it, right? What are the things that we don't need anymore? What are the things that 2025 has proven that by doing, it's created an opportunity cost, or it's diluted the good things, the things that worked in 2025? So instead of making a list of things to do, one of the things we do in the Sector Secrets Mastery is we think of a do not trade list, right? A do not watch list. What are those things we won't do? What are those things we eliminate? And a filtering type approach to the new year, not more things to do. If you're anything like me, you're always thinking of a new way to improve something you're doing. You're always thinking of a new way to look at something you're doing, always improving. But sometimes improvement means what won't you keep, right? What won't you do? What's no longer serving you? And so, think about that as you're going into the new year and ask yourself, gosh, if I went all in, right? If I went all in on a particular type of approach, maybe it's all in on an indicator, maybe it's all in on a particular asset class. What would that focus have done? And I don't mean all in on a symbol, and I don't mean getting rid of all your indicators. But let's say, for example, for me, buy the dip on a swing trading time frame of a daily works ridiculously well. And I often think to myself, if someone asked me, Rag, okay, what would you, or even better put, Rag, you're only allowed one time frame and one style of trading. What would it be? And without hesitation, it would be what I've done for most of my career. Daily time frame, trend following, right? And that's really what a swing trade is. Think of swing as synonymous with the movement of price, not a time horizon. Oftentimes, and frankly, erroneously so, swing trading has been minimized to a trade that you keep open for 3 to 5 days or 2 to 10 days. And that might be a viable and common time horizon. But what is swing trading? Swing is synonymous with price swing, right? Price swing for me is defined as find a trend, buy the dip. So the dip, the retracement, the mean reversion, the pullback is the swing. So these are things, the more that we think about the way that we're trading, what's working, not what we wish worked, not what indicator we wish we'd like to use, what's working, right? And then we be ruthless about it. And then as we go into the new year, focus on those things, if even just for a month or for a quarter. And those are the kind of things that, we're going to be talking about a lot more in the Sector Secrets Mastery, which, by the way, happens to be 30% off for a limited amount of time. So if you want to come check out what we're doing, do it while it's on sale, right? Take that money you save with the service and put it in your trading account and come join us in the room. So let's get to what's going on right now. What do I want to optimize for, not just for 2025, but maybe for the rest of this year? The rest of this year is a very short number of trading days. Today is a full trading session. Monday, it's a full trading session, and Tuesday is not. So we've got really 2.5 days. Am I going to optimize for making some big plays at the end of the year? Of course not, right? I'm not. In fact, and if anything, I'm optimizing for staying flat unless something is so compelling, it literally just grabs me and I want to be in that trade and I want to be in that symbol. So that's one thing. The other thing that I'm going to remember is that the first non-farm payroll of next year isn't until the second Friday of the month. So what reason would compel money, big money? Let's not confuse big money with smart money. But what would compel money, big money, to come back the week of the 30th, next week, for the second and third of the week? Probably very little, right? But what about the 6th, the week of the 6th, January 6th? Non-farm payroll is on the 10th. So that would be very compelling. That jobs data would be something that if I'm going to make a decision about what to do with that month, maybe that quarter, if I'm going to make a decision based on the importance of the most important job number we have, remembering that the Federal Reserve has a dual mandate of employment and inflation, that might be a reason to come back and make decisions about how I want to put my money to work. All right. So next up, I think I've got a sneeze coming on. All right. Okay. Let's see if it passes. Right. Okay. So let's have some coffee. All right. I'm allergic to water, apparently. All right. So let's get to some questions. Let's take a look at what's going on with the symbols right now. Is this a weak S&P? Let's step back and say, would we call this a weak S&P? Would we call this an uptrend anymore? Would we call this a downtrend? All right. So when I look at my indicators, I see this as a neutral structure, neutral trend. There's two things I look at: momentum, which is a more temporary state of being, but if it persists, it can create a trend. So I have a slightly bearish momentum, which really is, again, a more temporary state of movement. And then we have a neutral trend, which is a slightly longer, more consistent way of being. So I have what is a neutral environment. And then I'm going to look at one other thing. What was a trend that came before this neutral environment? Knowing that continuation is a higher probability. It was an uptrend. So I'm not bearish the S&P. I know it had a very difficult FOMC meeting day, as did many things. But let's contrast that to the NASDAQ. No red candles, no yellow candles even in that recent melee that we saw in the S&P. And the trend is far more intact. The momentum is bullish. The trend is bullish. It's wobbling a bit as of today. It's trying to go gray, but that's not enough to say the trend is over. It's just wobbling a little bit. All right. So is the NASDAQ stronger than the S&P? So those are things, if we can start to compare, where should our attention be? If there's anything that I would say that we optimize for, going back to what are we optimizing for? What we trade is more important than how we trade it. Does anyone here think that the S&P, in terms of bullishness, might have better follow through than the NASDAQ? And if so, that's okay. Everyone's got a different set of tools. But based on what we do, the NASDAQ is the better place for higher probability long setups. The continuation is more probable there than in the S&P. You go about doing these type of comparing and contrasting type questions, type scans to ultimately come up with a watch list. So then if the NASDAQ is the best way to go, then what within the NASDAQ is outperforming, right? Does XLK look better than XLF? Does XLY look better than, say, XLV? One of the best performing sectors within the NASDAQ is XLY. And it shouldn't surprise anybody. This is where Amazon and Tesla are, which frankly are two of the best of the seven magnificents, right? These are probably your most magnificent of those seven. And they're concentrated in consumer discretionary, and consumer discretionary is concentrated in the NASDAQ. So there's your alignment of index sector stock. And again, if we can repeat this process, we'll find higher probability symbols to put on our watch list. Notice I'm still focusing on the long side though, gang. There is a higher probability trend too. The easier of the two trends to trade is an uptrend. Some folks find a downtrend easier to trade. Gravity does apply. I used to love downtrends. I don't anymore. When I look back and I study my trades, I trade far better in an uptrend. I think most traders actually do, right? So just accept where, what trading habits are my strength? Buying dips and uptrends, waiting for those uptrends, finding longer term timeframes. What is my weakness? I don't particularly like momentum breakouts. I can't say it's a weakness, but I can't say it's a strong part of my portfolio. I would say that right now, day trading is not in any way outperforming swing trading. We have to look at ourselves in a very, sort of objective, if not architectural way. We're thinking about what we're building and what pieces are in place. All right, so let's see here. Let's take a look at our questions. And of course, as always, gang, you want to start 2025 off with a great group of traders focused on trading, focused on getting better, focused on supporting each other with the Lorna Bot and I. Come check out what's going on in the Sector Secrets Mastery. You're gonna love it. A lot of folks realize, hey, this is home. This is where the focus is. This is where we optimistically look for opportunity. This is where we follow process. This is where we manage risk. This is where there's no question mark about position size. We have a process for all of that. And the cool thing about the process is we've built in enough on a foundational process where everyone can tweak it just a little bit to make it custom fit, right? And that's a pretty cool way to go about trading, where you say, look, I'm not going to be a mini me of Raghee, right? I'm, no more than I can be a mini me of my favorite traders and traders that I look up to. But I can take from them pieces and say, look, if these are the places that I can tweak, and I give you all those specific points in the formula where you say, hey, this is tweakable, this is not, right? This is where you can make an adjustment, this is not. And then you start to custom fit that process to the way that you want to risk and that you want to trade. So it's very cool. All right, so let's see. Is the immersion part of the mastery? So yeah, I've been talking about an immersion that's coming up early next year. I thought we were going to do it in January, but we're actually going to do it in February, which is going to be great because a lot of folks the first week or two are just coming out of holiday. So, January ends up being kind of holiday affected. So February is a great month. And what's going to happen in January is I'm going to share with you a lot of what we've done. Actually, I should say a lot of what I've done, which is what is in the Sector Secrets Mastery. My trades are the Sector Secret Mastery trades. My setups are the setups we use, as I like to call the Sector Fu Mojo Dojo trading house. So we'll take a look at that throughout January. And then in February, and we'll have a webinar and everything to explain, and I'll share all that again. But in February, what we're going to start is an immersion. Now, what is the immersion, right? And I'll just give you a quick idea of what it is. So you're going to join me for a quarter. You're going to get the Sector Secrets Mastery, but you're also going to get separate opportunities to sit with me once a week. We're going to keep, and here's what's really cool. We don't do immersions all year long, because what really is an immersion? It's a guided, focused, step-by-step, hold your hand process where over the course of, in this case, 3 months, my goal is to remember that all these folks are joining at a particular time, the Sector Secrets Mastery, and we're going to take you from 0 to where I think you really need to be after a quarter in that very structured, very organized type step-by-step approach. For members that are already members, you're going to get this anyway, because this is what we do to members. We're not going to leave you out. We're going to absolutely include you, because that's really a great way to polish up, to fine tune, to sometimes go, oh yeah, I forgot that process. And so we're going to take the whole group through that immersion at the beginning of the year, so that as we go through the year in 2025, there's going to be a whole lot more understanding and confidence and clarity about the kind of trading that we want to do. So there's no difference. It's an additional thing that we're going to be doing come February. Now, I'll have a much better explanation. I mean, this is still, we're kind of putting things together. In the back of my mind, I'm wondering, hey, do we want to have different ways to share tools? And, so I'm still kind of formulating that. But if you're ready for a immersion, yeah, it's going to start in February. And then why join me? We'll talk about that throughout January, because the best thing I can do is show you what we've done in December, November, October. That's the recent price action. But we'll talk about a lot more. But what is it that we do? And what kind of trading style do we do? And is it a match? Is it a match or not? So there's no difference. It's just going to be an additional part of the mastery, GR. All right. Jazz asks, selling SPX credit spreads. Well, in terms of what's working and not working, right? And I'm just reading that now, Jazz. In terms of what's working and not working, I think ultimately there's two things we have to remember. And Jazz, I know for me, my best trading happened when I started becoming more of a trader who was willing to hit the delete button, not the enter button, right? In other words, when I said, I'm not going to do this, and I'm not going to practice this, and I'm not going to focus on this, my trading got better. Filters take things out, right? We should think like a filter. And I agree with, finding things that worked. And then maybe if you're asking yourself, well, what did I replace? What did I replace something that was underperforming, right? Or better, recognize what was performing and what was underperforming. So those are all things that we have to go through the process of. And, it's not that something's not a good indicator or a good approach, but does it work for the current environment? Does it work for the time I have available to the market? Does it work for the way that I'm wired? I think that one of the most difficult things in trading is to see a trader that is doing what we want, making money, and has the things that we have. Let's face it, we see all these things on Instagram, and all these traders are, showing their stuff and their jets and that's cool. That's cool. What we are tempted by, and whether or not that approach fits our temperament, our time available, our wiring, that's a really tough process. So it's not to say something's good or bad. It's like pizza, right? I often say, some folks like pineapple and ham on their pizza, and me, give me a burnt pepperoni pizza. Still pizza, two very different ways. Not one right and wrong. It's just, what do you prefer? What works for you? So yeah, I like a burnt pizza with pepperoni on it. Okay. It might be too early in the morning to talk about pepperoni pizza, right? Nonsense, Raghee. All right, your thoughts on fund managers taking some profit the first week of 2025? Eddie, as much as there is window dressing, right, or performance chase, there is window undressing. Yes. Would we start to see the likelihood? Again, we don't know if it's going to happen. So remember, Eddie, there's a scenario out there that's possible. And then our job now is to not predict that that's what's going to happen, but rather have in our mind and on our trading plan what actually has to happen for that to be proven as true. So if I'm looking at sector rotation come the first week or the early part of January, first I have to ask myself, what's the timing? So you got that part right. And what would that look like? Would that look like things like consumer discretionary, jets, and technology profit taking and benefiting things like metals and mining, home builders, oil and gas explorers, whatever, things at the bottom of the relative performance? Because that's really the most classic version of sector rotation. Take profit in outperformers. That profit then benefits the underperformers, with the expectation that if something's already in the basement, all it's got to do is get to the second or third floor, and that's a great improvement, as opposed to buying something in the penthouse and hoping you can move up into the clouds. So that's where the rotation comes from. It's profit taking to bargain hunting. So as long as we know what that looks like, right, then we can define it, and then we can recognize it when it happens. All right, I think a lot of folks, yeah, Meb, I'm not sure I'm a big fan of breakout trading. That's definitely not something that I love, but there are some very cool breakout patterns. In other words, how do I know when a particular resistance level, when broken, could usher in higher highs? Or how do I know when a particular support level, when it's broken, could usher in lower lows? And ultimately, what we want to remember is, again, what works for one person may not work for another, and therefore not forcing ourselves to be a type of trader that just is not in line with our wiring, or in line with our risk tolerance, or in line with our position sizing. What are some of those issues? If I don't like the vulnerability of being long at a higher high, I'm not going to do it. If that's what I like to see when I'm in a market, then I will. If hitting for large wins is the way that gets you up in the morning and ready to trade, then that's a different style, as opposed to just getting on base, which is my style. I want every game for me to have an opportunity to get on base or bat a run in, right? I just want to get on base, hit singles, hit doubles. Occasionally I'll hit a triple. Occasionally I'll hit a home run. Rarely, occasionally too, not as often, I'll hit a grand slam, but I'm always optimizing and just connecting with the ball and getting on base, right? As opposed to every time I'm at bat, I want to send it over the wall. Again, nothing wrong with either, but which we aligned with, right? And those are things that, yeah, the more that we can go back and say, this particular style is not for me, and then remove that from consideration, from temptation, yeah, then, that's where for me, the consistency comes from. I don't try to be something that I'm not, right? I don't try to be the type of trader that people would expect me to be. You're a professional trader, hit those home runs. That's actually not professional trading. In fact, professional trading, I don't even like the word. What's productive? What's profitable? Manage risk first, right? So some traders might say, Rod, that doesn't suit me. Cool. Now you know, right? Can't be all things to all traders. And I think the smartest thing you can do is listen to what a trader's doing, see what kind of trades they're putting on, and go, wow, yeah, those are the kind of trades I want to put on myself. All right. What are my thoughts about index funds for longer term? I'm a huge fan. I'm a huge fan. Yes. Sergio, if you ask me on a weekly time frame, if I've got a 10-year time horizon and you're going to buy the 5, 10, and 20% dips in the SPY all day, every day, that's something I think is a great, great way to look at a longer term, more position portfolio type methodology, which is something we do in the mastery as well. Yeah, Cal's my guy, Chris. Cal's my guy, right? Healthy for all games. He's the Iron Man, right? I still believe he's the player with the most consecutive games. Shows up healthy, can help out his team, gets on base. That's exactly who I want to be, right? Okay, gang. As always, thank you so much for being here for Charts and Coffee. I will see you Monday for 9 o'clock, same time, same station, for some more caffeine and charts. All right, gang. Be good to each other.